Always a pleasure to see you too. And yes, we're very pleased with the strong start of the year. 5% growth year over year. It's a little bit stronger than we originally expected, mainly due to timing effects moving from one quarter to the other. We feel very pleased with, once more, with the proof point of the resilience of our offering, of the value of a broad market exposure and the strength of our offering. Also good to mention the continued momentum of pricing that was a strong contributor of the top of the results, with margin expansion, sequential margin expansion, gross margin and EBIT margin expansion versus Q4. So good start of the year that gives us one more data point of comfort for aiming and on our path to deliver the year end of 4 to 7% growth and 25 to 26 EBIT margin. So very good start of the year.
Esther, there is an argument out there, and it's across the board, that the companies such as yourselves are creating inflation by inflating your margins in the current environment and hence keeping interest rates higher as well. How do you face those accusations, given what you just said about your margin expansion?
Sequential margin expansion versus Q4. We still have margin compression versus Q1 last year. So we started gradually we saw last year gradually the contribution on pricing, but we still face margin compression versus Q1 last year, and we're aiming for a flat gross margin at the year end versus last year. Bear in mind that we price our solutions based on value, not based on the cost of how we produce. We have very good close conversations with our customers, and we're ensuring that through the price we capture our fair share of value. But again, pricing being the reflection of the value that we bring in and ensure that we're capturing our fair share of value for our customers in place.
Esther, I want to pick up on a comment that is in your release today about just how diverse the business is, 30 different industries, which means that you're a good test on some of the economic factors. Are you witnessing a slowdown out there that suggests recession is coming at some point?
We see, as you very nicely mentioned, we're present in more than 30 different markets, a very, very broad offering, and also with a very resilient portfolio. And here the trick of the game is the resilience on how you respond to a very volatile market. We see softer demand in a place that we're very pleased that we see it in enzymes for COVID testing. We like the world with no need of enzymes for COVID testing, but that's driving a slowdown. We see softness of demand in textile, driven also by probably the downstream of lower demand from consumers. We see a little bit softer demand in household care in domestic markets, leading by consumers washing less, consumers being very cautious of where they spend their pocket money, and in some cases down trading. But we continue to see the penetration of biosolutions in emerging geographies. We continue to see the value of the innovation that we bring in bioenergy, and overall net driving to a 5% growth.